So welcome everyone to yet another episode of Inside Uptiq. Today we have with us Law Helie, who's the EVP Product at Uptiq. Hello, Law.
Hey,
How are you?
good. How are you?
I'm good as well. So Law brings more than 20 years of experience in banking, lending technology, product leadership, and financial services innovation. So, Law, here's the first question for you.
Sure.
You've spent decades in small business lending and consumer lending, and you've looked at things from every angle. So, what do you think is that one bottleneck that just refuses to go away from the industry?
I mean, I think in general, the largest sort of obstacle in banking is really, speed of adoption, it's regulations, and then it's also for like the financial institutions, it's, working with their data, right? So you've got people coming in, they support a variety of products and services. You really have to be able to, work with customers across the spectrum. It requires different data. It requires manual processes. It requires manual review, and that really can start to slow the processing time down, and essentially what is frequently called like the time to yes from like the time of application, right? And that takes up a lot of financial institutions' time on the front end. On the back end, there's a tremendous amount of compliance and reporting and due diligence that needs to be done. You're still looking across multiple branches and physical networks where you really have to get in and make sure everything is accurate and up to date. And over the last probably 10 to 15 years, as you really look at the explosion of like the digital services and self-servicing, customers start to demand more. You see fintechs that have popped up in the space over the last few years that have a really strong hold, especially with like the younger generation.
Mm.
So you also have now traditional financial institutions looking to attract that younger generation, looking to be more competitive on the digital space. And as it relates to really tech budget and appetite to change for those institutions, there's a lot of work to be done there. I mean, I wish I could say there was just like one thing that needed to get kind of tracked, but there's quite a bit out there. And I mean, having started my career like working in branches, I still remember a lot of paper checks and those types of things, and that's slowly gone away. And as customer needs and sentiment changes, the banks, credit unions, what have you, also have to sort of change to meet customers where they are.
Okay. So we see that there's a lot of underlying anxiety that comes around saying that AI is going to get the jobs, the banking or the lending jobs. But how do you think the roles of the, say, suppose a relationship manager or an underwriter is going to get empowered when they start using agents like Uptiq agents?
Yeah, it's a good question because there is a lot of anxiety in the space about it, and for the financial institutions that I've spoken with, the majority of them are not looking to replace their folks, their employees with AI, right? They know that's not really like super viable. A majority of them are looking to like redeploy the free time that AI can give the associates back, to whether it's customer care or more complex lending. And really, folks need to look at AI as a way to help with those really sort of repetitive tasks, data analysis, extracting information, providing insights based on the financial institutions guidelines for what they want to do, and really thinking of it as like a coworker, and helping you to really streamline your day, your process, what's your priority, the ability to look at data and way more quickly pull insights out of it. If you think about spreading, if you think about some of those functions that are there, I mean, that can take a lot of time. You're looking at large commercial loans, you're looking at complex structured entities. Having something that is just dead focused on doing that. It's really more about empowering the associates and riding sort of shotgun with them, in their daily routine and helping free up time. I mean, gives folks the ability to focus more on, customer needs and growing relationships. And really, relationship building is something that over the last few years we've sort of seen a swing kind of come back to. In the US is around, like, it used to be push everybody to the digital channel and let them self-serve, and that kind of worked out great for some people. But then you started to see sort of a shift where, the customers were looking for, whether it's, commercial, small business, consumer, whatever, they were looking for more of a relationship with their financial institution, someone who can provide them guidance on, what they should be doing, how they could optimize, their financials. And, by leveraging AI, it will allow, the folks in those roles to do that, because they won't be as bogged down by, running reports or doing spreadsheets.
So, for the next question, Law, we see that financial institutions these days are being bombarded with AI pitches. In your view, why do you think the fundamental AI model is particularly unfit for complex financial operations like underwriting, spreading, or compliance?
Yeah, so I think that, in general, AI is a great tool across the board, right? And it all comes down to how you apply it. Even if you're using, AI to generate code or generate, something for you, you still have to have the expertise in house to know sort of like what you're looking at, right? From a developer standpoint. And if you're looking to just sort of apply a generic AI solution to the financial services industry, you have to be cognizant and really, understand the compliance landscape, what you're allowed to do, what makes sense to do, because it can do a lot. I mean, there's nothing really preventing you from stringing together a start to finish, AI process where no one ever touches a loan or a product. But it's just not realistic in the regulatory landscape. There's, a real need to make sure that financial institutions are staying compliant, that they are having the appropriate human in the loop steps. And that's something that, when you think about it, a generic application of AI isn't really going to do without a lot of tuning from the financial institution to get it to where it needs to be. One thing that was really attractive about Uptiq was, like, the focus was on financial services, right? So when you're building agents and you're structuring workflows, they're specific to the financial services industry, and there's actually business problems that you want to solve. And being able to apply that and point to definitive business problems that are, stifling the chain, or, making the application process or the back office process, longer than it needs to be. Leveraging AI there is a great application because it has natural stops in the process. So that way, nothing kind of gets too far afield before people take a look at it. And I think, over time that'll change, as AI gets better, and people start to sort of be more confident in the results. And, at least in the US, depending on regulatory framework, is really going to drive what financial institutions can and can't do, with AI.
So the last question, we'll wrap up with this one. So if we look at 24 months from now,
Mm.
how do you think the competitive landscape will look like for the institutions who adapt to AI and the ones who choose to continue to stick to the legacy and manual workflows?
Yeah, sure. So I think that the sort of results speak for themselves in a way for some of those early adopters, right? So if you think about 2 years out, the folks that have adopted AI, they're going to have a better insight into their customer profile. They're going to have better insights that allow them to make, recommended offers, more accurate, marketing campaigns, the ability to predict what their customers are looking for. It'll be more efficient across the board, just, front of house, back of house, the whole thing, because they'll be able to optimize those workflows. So they'll be able to, spend more time attracting customers, growing relationships, prospecting for new business, because they won't be as bogged down from a reputational standpoint in the industry. They'll be seen as, quicker, more responsive, more having a better ability to kind of, predict what the next product or service I might want. as well as a tighter just sort of operational discipline. Because one thing with banks is they sit on a tremendous amount of data. I mean, it is really mind-boggling how much data some of these institutions have, and by leveraging AI to really kind of get through that, how you want to optimize your operations, your pricing, your competitive landscape, your marketing, your customer acquisition strategy, portfolio balancing. They're just going to be in a much better position. And the folks that kind of don't really dive into it, if you think of it a lot like the online banking era, back in the day. I mean, if you're not going to really go in and embrace it, you're going to just have to be playing catch up for those that do. You
Okay,
know,
right. So that was quite insightful, Law. Thank you so much for your time,
sure.
and thank you for joining us on this episode. So, guys, this was it from today's episode, and stay tuned for the next coming episodes.